Well, hello everyone. Welcome to the second webinar of our global knowledge webinar series on earned wage access, a new solution to an old problem, advancing wages in the fintech era. This webinar is called Wage Advances, a new frontier for fintech regulation. Last session, we discussed a little bit what EWA is, what are the potential benefits and risks for workers, the impact that we are expecting. And today the idea is really to focus on the regulatory challenges for the service, both from a financial and a labor perspective. I would like to invite Valérie Breda, who coordinates the ILO Global Center on Digital Wages for Decent Work, to introduce this webinar. Valérie, welcome.
Yes, good morning, good afternoon, good evening, everyone, and thank you, André. Welcome to this webinar. As André said, I work for the ILO, and I'm leading an initiative that is called the Global Center on Digital Wages for Decent Work. So the main objective of this Global Center is to promote the digitization of wage payments, so the payment of wages on bank accounts, on mobile money accounts, on prepaid cards. And the ultimate goal actually of this initiative is to advance the financial inclusion of the workers, but also to boost the payroll efficiencies at business level and to contribute somehow to the formalization of employment in the sense that employers who are digitizing the wage payments of their workers are encouraged actually to clarify the contract or the employment relationship, and also in some cases to register them to Social Security. So for us, what was important when we started this work is not only to promote the payment of wages on bank account, but ensure that workers can also use their accounts and also access other financial services such as savings, credit, insurance. And we came across actually a new service. I mean, it was a bit new to us, this new service of earned wage access that enables workers to have access to their wages, their earned wages earned before the payday. And very often those services are offered through fintech. So the technology enables workers to access their wages to address liquidity issues, and it also can also facilitate the management of wage advances on the side of the enterprises. So we have seen actually that globally there are, we came across at least 69 providers that are offering this service in partnership with employers. So we call it the employer model, so agreement between the EWA provider and the employer to offer the services to their workers. These services are mostly offered in large enterprises, but we also came across SMEs that are also accessing the services for the workers. And the main sectors where we have seen this EWA service offered is in the retail sector, in the hospitality sector, and logistics. We have seen in as André said in the webinar last week, the benefits for the workers in terms of accessing their wages before payday, but also benefits for the employers in terms of managing wage advance. We have also seen that there are some risks that are related to how the service is designed, how it is offered to the workers. So there is a whole dimension of providing responsible service. And we have also seen that it's very important for workers to be well equipped actually with knowledge and skills to access the service in order to fully benefit from it. A risk actually that comes across, or maybe more than a risk, a challenge, is when it comes to regulation around the service. And in most countries, this still in a very gray area, and the providers operate in a gray area. We have seen that it's basically, from what we know up to now, only in the USA the country has moved more decisively on a regulation toward this service. And we have noted as of July 2025, so very recently, 12 states in the country have issued a regulation to facilitate the provision of this service, to facilitate, but also to regulate, obviously. Very often, at least in the US, these regulations have been issued as a financial regulation. And I think this is where the whole discussion is about, whether it should be a financial regulation, whether it should be more related to labor regulation. When it is financial regulation, is it considered as a credit or is it considered as a payment? So what we see is that there is really a gray area that needs to be explored and defined to help actually providers and employers and workers actually to benefit fully from this service. We have also noted in the UK, actually another country, where on the regulatory framework on the environment, there has been some progresses where actually a group of providers have joined to establish a code of practice. So it's more like a self-regulatory initiative to ensure that those providers are operating and offering services in a responsible manner. And the reason why they have come up with this code of practice is because the Financial Conduct Authority has recommended them, based on a review that was done in the sector, to improve their practices and to come up with better practices. So anyway, I don't want to enter too much into those details because this is somehow the objective of this webinars, but just to mention that it is a gray area. However, it's very important that regulatory frameworks are conducive actually to make sure the provision of EWA service can be done in a responsible manner and in efficient manner. So I wish you a great webinar, and we have a great panel of speakers. So back to you, André, for the continuation. Thank you.
Thank you, Valérie. And yes, indeed, we have a very nice panel of speakers. I would like to invite them to join us. First one is Evelyn Astor. She is a Director of Economic and Social Policies at the International Trade Union Confederation. Juan Carlos Izaguirre, he is Senior Financial Sector Policy Specialist at CGAP. We have Carlos Garcia, founder and CEO of FinHabits. This is a fintech in the United States, focusing on Hispanics and Hispanic workers. Nadia Gonzalez Elizondo, labor and employment law expert based in Mexico. And Agustina Morni, Director for Employment, Skills and Diversity at the International Organization of Employers. Thank you so much for joining us today for this conversation. The idea is that really we talk about EWA and other just digital financial services for workers in general, and the challenges that we face for regulating these services and these products. I will start with Carlos Garcia. Carlos, thank you for joining us. FinHabits, as I said, is a company that is dedicated to improving the financial well-being of Hispanics in the US. I would like you to tell us from your experience running this fintech, what are the main financial challenges faced by the most vulnerable workers that you see, and how do you think these digital financial technologies have been helping to address these challenges?
Thank you, and it's a pleasure to be here. FinHabits caters to the Latino immigrant community in the US. It's mainly middle and low income workers. One of the things we see is, the core issue in this case is the mismatch that we see, that is when people earn the money and when they need to spend it. For example, we see firsthand, right, through our fintech, how a lot of Latinos worry a lot about covering basic expenses like rent or paying the car loans. And the issue here, right, is that it gets compounded when you include the language barriers and the mistrust in the financial system. So what we think as a fintech, right, is not just a provider and access to a service or a product, but is as an educator, we need to help, in this case, the Latino immigrant community understand how the financial system works, help them build trust, and help them understand how different tools, in this case, EWA, work. So we spend a lot of time addressing the different options. If FinHabits does not provide EWA, but we partner and we help our consumers understand what are the pros and cons of using EWA. And as a fintech, I think what we bring to the table is an innovation that allows the consumers easier access, whether it's in their language and on their mobile phones. And these are innovations that in the past they didn't have.
Well, thank you for that, Carlos. And I move now to Juan Carlos to talk specifically about digital credit. You have at CGAP just launched a report on responsible digital credit, and you were acknowledging the benefits, but also pointing to some of the risks that borrowers face and the challenges for regulators as these services move into the digital space. Could you start just by explaining to us the developments that you have been able to map in digital technologies applied to the financial sector, Juan Carlos?
Thank you very much, Andre, of course, and thanks to ILO for inviting me to participate in this very important webinar. So yeah, the digital credit market has been experiencing a very important transformation in recent years. Some of key developments include this kind of very rapid growth of the market and an evolution of the market, which includes a kind of an increased complexity and modularization. We see a growing number of actors that are offering a specialized types of services, more niche services at multiple steps and phases of a product life cycle. So this demands a much better understanding of all these different steps in the customer journey of a digital credit product, because it's becoming much more complex with different actors entering this ecosystem. Now, another important development is the use of alternative data, including the utilization of social media activities, cell phone usage, transaction history, which enables the offering of a range of financial and other types of services to people who were usually or before not well served by the formal financial sector. And now even embedding some of these products into services of non-financial companies like social media platforms right now. Also, there are important developments like the use of AI that can bring lots of important benefits in terms of automation, speed, convenience, customization of services and products, but also comes with some risks. We include risks such as unfair discrimination, and an important one, I think, is exploitation of behavioral biases, and that applies to multiple new types of products, and I believe also EWA. Like something like a misleading message framings for the consumers to understand or think that certain conditions are true, but they are not really in the way they are explained. Or this idea of the loss aversion of a great opportunity that comes your way, and this kind of FOMO, fear of missing out, a great opportunity that's coming to you. Or dark patterns, right, that lead customers to accept some default settings that may not be the best for them. Or in some cases, even trying to make consumers being more confident on their abilities to do mental accounting and to take new products than before. So all of these development are really seeing an increased exposure to consumer risks, right? And we believe that it's important to take into account all the potential risks, because they can eventually lead to negative outcomes, potentially, not necessarily always, but can lead to some kind of over-indebtedness, monetary losses, and eventually even financial health deterioration. So we believe it's important for, in this context, for different authorities and different actors to understand which are the different actors that are involved in this ecosystem. Are these financial, non-financial, a mix of them? Which are they? What are the kind of standards that they are following when they are offering these products? And to kind of understand, realize that this fragmentation is coming to potentially uneven or different standards being put into place at different parts of a customer journey.
Well, thank you for that. And as you were explaining, I think I see EWA in many of the issues that you pointed, especially the behavior for sure, but also data sharing. This is a service that relies a lot on data sharing, and there is in a way a kind of for regulators, it's tricky for them to understand if they are really regulating something new or if it's just an old practice being repackaged under a new name, and how much the technology is actually changing the product or the service from a regulatory perspective. And at the same time, I also acknowledge that as these discussions move, we end up having complex or sometimes not appropriate regulations for the services because they're just evolving too fast. And then here I would really come back to Carlos. Carlos, as I've been talking to fintech providers all over about this particular service, and what they say is actually that they would like some level of regulation because they need regulators to have clarity on what's being offered, so they can operate more clearly, and they can also in a way organize the market and make sure that they know what they are offering. How do you see the issue of regulation from the perspective of fintech providers? What do you see are the main opportunities and challenges for regulating fintechs that offer that kind of service?
Yes, I think as a fintech CEO, an operator, right, what we need is an approach that it's going to help with innovation, and not stop us from helping the communities we're trying to serve. When regulators do not understand all the players, right, they start confusing and they start commingling everything. And I think what we need is a framework that distinguishes between, in this case, right, in true wage access advances versus credit products. So what I recommend is an open framework where we have an ongoing dialogue between all the players, the workers, the employers, right? This type of webinars are always very helpful. I think in the US, there are different regulations that are already coming up, but it also hurts the innovation. For example, I'm already regulated by different regulators. We have to pay a lot of fees to the lawyers, and the law firms end up taking a lot of that value that we create. We're trying to create value for the consumer, the worker. When the regulator comes in and creates all these layers, and there's federal regulation, there's state regulation, it's very hard, right, for companies like us to innovate. One other thing that I would like to add is, as a fintech, right, usually we are also incorporated and we have shareholders. And I've seen this as well, right, that sometimes with the pressure of the shareholders, the investors, the fintech has to be forced to just make money because that's what the shareholders want. So there's that complication as well. As a fintech provider, you have to be able to select who you want to bring as an investor that ultimately will allow you to serve the communities. So all these things have to be in play and in motion to really help the communities we're trying to serve.
Yeah, well, thank you, and I appreciate your point on being regulated by several different bodies. And here I would like to come back to Juan Carlos, because on EWA this is in a way a challenge, and one of the major discussions, and as Valerie has pointed out in the very beginning, is whether this is a credit product or not, right? Is it a wage advance? Is it a loan? Is a wage advance a loan? And all of that tends to multiply the answers to regulators and to multiply regulations as well in a way, because in particular in the US there are many answers to this very same question. And I would like you to comment on that and on the point that Carlos made, but also if you can help us with a kind of a framework on what characteristics do we need to look at to say, well, this is a loan or this is not a loan? Well, how would you go about helping us understand the service from a regulatory perspective?
Thank you. And I totally understand Carlos' point. I think this is something that we need to always keep in mind. I would also bring back that comment that we've been, in a way, there before in the financial regulatory landscape, right? Many years ago, we talked about microfinance or microcredit as a new type of product, as a new type of industry that initially was more of a non-profit sector rather than a profit sector. And therefore, the question was, okay, should this be regulated by financial authorities or should be out of the scope? But then we also saw, oh, this is rapidly evolving, and this is coming from a non-profit transforming into more for-profit and evolving in their business model. So I think then regulators had to catch up. Well, regulators always try to catch up with developments. So I think it's something to keep in mind, because in the end, what we want is the industry to be healthy, right? To make sure that it's healthy, evolving, and providing good services to customers for the longer term, not for the short term in a predatory manner or in a way that affects or produces negative outcomes to customers. So I think that's an alignment that I think all the actors in the ecosystem can and should have. From the side of the digital credit, there's a whole discussion right now on what is credit. We're talking about that, for example, from the side of the paygo, off-grid solar finance industry. Is it credit? Is it not credit? It's paygo. Well, the BNPL products, buy now, pay later. Is this necessarily credit? Some are credit, some are more financing, some are more payments, it's purchase, deferred purchase. But what we are trying to see is some key features, right, that can help us define. Okay, for example, is this money that is given to the customer that has to be paid back in a certain number of days or weeks, right? So what is that paid back? Does it entail a fee, a repayment of an additional money, interest, fees, etc.? So it's a repayment with an extra amount that consumers need to pay back over a certain time. If customers do not pay back, what are the consequences of not repaying? Does this entail another fee or not? Or maybe even a negative consequence on their history of paying a product or repaying a product? And I'm trying not to use credit as a term. So what are those elements that make a product seem like credit? And we can call it credit-like, we can call it credit, but also thinking about what additional products can be offered. So because in many cases you have an initial product that is more basic, but that easily you can graduate to obtaining another product that entails much more of a credit condition, right? So if we see that as a potential evolution, then we can see, okay, there may be a role for regulators, financial regulators, to have a say or participation. And in our also paper, we're thinking about, okay, what are the potential roles? It can be, and it may not be a single solution here. We may be talking about a range of actions. We can say, okay, when the products and the providers are more like a type of credit, pure credit, then they could be part of the overall financial consumer protection framework, including being under the remit of a financial authority. But you may have other providers that may not fit the whole credit, only credit type of offers. So therefore, there may be the role for other authorities to play a similar role with similar basic consumer protection standards that apply to all, but with different levers where you can require a bit more depending on the type of business model. And you may have different authorities. The financial sector authority for a certain type of providers, the financial, more general consumer protection authorities or other authorities where they follow similar approaches, but have other types of responsibilities, similar responsibilities. And a couple of other points that I want to emphasize is that coordination has to be important among these different players. Also, the role of industry codes of conduct. We support this idea. It's important to start with what the industry can do on its own as potential basic for then thinking about other types of regulation. And then monitoring. That's one point I want to emphasize: market monitoring, understanding what's happening in the market through using different tools, phone surveys, mystery shopping, analysis of complaints data, etc. Because we have, if we want to regulate, if we want to have standards, they need to be evidence-based to understand the risks, the experiences, the situation in the market, rather than being blind and not knowing. That's the worst sin of an authority, is regulating
Yes.
without data.
Yes, well, thank you for that. I mean, I think it's a lot of homework for the regulators and the providers, but this is pretty much also the perception that we had when we did our report on EWA and the challenges ahead from a financial perspective. But what's particular about earned wage access is that it's also, in a way, a wage advance, and that brings into the equation the labor aspect of this financial or not service, right? And here I wanted to invite Nadia Elizondo to join the conversation and to help us try to understand what's at stake here when we are approaching EWA from a labor perspective, right? Wage payment frequency is a highly regulated topic. Wage advances are a highly regulated topic. Workers' benefits, employee benefits in many countries are also highly regulated. Could you give us just an overview of how the labor side of the regulation should be understood for this particular service?
Thank you, Andre. Hi, everyone. Yes, of course. Well, in most countries, CWA is not expressly regulated. But we can find some good guidelines. And as Andre just mentioned, minimum wage withholdings are heavily regulated and protected, especially or starting with ILO Convention 95 on wage protection. So, for example, in my country, in Mexico, under the Mexican federal labor law, wages have to be directly paid to workers, either in cash or legal tender or through bank accounts, specifically indicated by workers or employees under the worker's name. So that's something that the ILO Convention 95 specifies. Electronic transfers are available in Mexico. And I think we should make this very particular distinction between advanced wages and already accrued or earned wages. It's an entire difference under the legal framework in each country. And I think that might be the key solution to work on it, or to further regulate this EWA. Also, frequency on payment. In Mexico, for example, the periods to be paid are not so long. For example, workers performing physical or manual work are paid once per week, and the rest of the employees bi-weekly. So it's not such a long period. Pay slips have to be very clear. Each pay slip has to be, or to include, all the concepts that are being paid and all the deductions. So that is also a challenge as regards to payroll integration with fintechs and EWA providers. We should specifically indicate that this withholding is under the concept of EWA or maybe an early payment. But there is also this general rule that employees are supposed to freely dispose of their salary. So I think that's another issue that we can take advantage of, because if they request or consent, and the key point as well is how we document this, either through a regulation or a collective bargaining agreement or an individual employment agreement, we can find a way out in order for EWA to be valid in these countries in which salary is heavily regulated. I also want to mention that, at least in my country, employer loans to employees are capped to 1 month's salary, and also employers cannot charge interest to the employees. All these in accordance with ILO Convention 95, of course. And as regards to benefits, there are some mandatory benefits, minimum mandatory benefits, and some supralegal benefits. And in that case, I think in Mexico, we have good practices that can help fintech companies and also other countries that are hearing us, because we have these supralegal benefits or social welfare benefits that are discretionarily granted or implemented by employers, and they usually entail tax benefits. And we have this concept that we call savings funds, in which the workers contribute with a certain percentage of their salary, and then the employers match the same amount of that savings. The savings are put together in a trust or in a separate bank account, not under the payroll, and they generate interest, and then they are allocated or distributed once or twice per year. And employees can actually request advance payments of their accrued saving funds or a loan of the amount that they are supposed to get by the end of the year. But I think the key element here is EWA is already earned or accrued. It's not an advance wage. It's an anticipated or early payment of your accrued wages. And I think it's possible to regulate or negotiate under CBAs, under collective bargaining agreements, and establish proper regulations for that specific point. For example, establish some caps about the percentage that can be paid as EWA, and also the frequency, how many times during a month employees can access to EWA. I think those matters have to be regulated, especially because salary withholdings are, as a general rule, prohibited in some countries, for example, in Mexico, and only certain withholdings are valid. For example, alimony or social security dues and contributions, taxes, union fees. So imagine a case in which employees are requesting EWA, and then the actual payroll is not sufficient to pay these mandatory withholdings.
Yeah. Yeah, I thank you so much for this, Nadia. I will get back to you, but Evelyn, I wanted to invite you to join the conversation. As we see, this is already in a way highly regulated. There is a lot of regulation on wage payments, and many of it may apply to EWA. And the reason perhaps why there is so much regulation is actually because this is common practice, right? Wage advances and anticipated wage payments, those are common requests from workers. This is something we know happens a lot in the workplace. I would like you to start by telling us, from the perspective of workers, why do you think that happens, right? What are the perceptions of workers on the issue of wage advances and EWA?
Sure, thanks, Andre, and hello to everyone. Let me start off, first of all, by acknowledging the positive intent of earned wage access. The idea that having an anticipated or an early wage payment or an advance can provide greater financial inclusion. Having faster access to one's earnings can help smooth cash flow in difficult moments. And I really want to thank the ILO for looking into this and reviewing the landscape and the implication that these tools can have on workers. But indeed, from a union perspective, we need to ask ourselves a deeper question around the root causes, as you say, Andre. Why are workers compelled to borrow from tomorrow's paycheck in order to simply survive today? Because if wages were living wages, wages that ensured a dignified livelihood for workers and their families, there would be no such need. A living wage should include a margin for contingencies and emergencies, the basic cushion that every worker and their family requires. And if that cushion is missing, then a pay advance app is not true inclusion. It's actually just a pressure valve on low pay. You've done really interesting research at the ILO on this, showing how while EWA services are promoted as tools to manage emergencies, a lot of workers are using them to cover daily needs. And that's a root problem that we need to address. And there are also a number of very specific risks with some of these private financial services associated with EWAs. Firstly, in relation to debt in disguise, because we've spoken a lot about regulation. When they're not sufficiently regulated, EWAs can actually exacerbate workers' economic vulnerability. High interest rates can be a problem, but even no interest models can conceal costs with tips, fees, subscription bundles, and small charges can accumulate per advance. And when wages are already low, this can trap workers in a cycle of dependency where they're always one step behind in terms of their pay. Another risk that we see has to do with data and power, because we know that EWA systems can collect highly sensitive employment and spending data. And without sufficient safeguards, this can lead to data security, privacy concerns, even concerns about whether or not EWA providers are monetizing the data of financially vulnerable workers. And then the third is in relation to cost shifting, because when emergencies strike, fintech is claiming in some cases to fill the gap, but the real responsibility lies elsewhere because, as I mentioned before, a living wage is needed. Employers have a responsibility to pay adequate wages, contribute to Social Security. Governments have a responsibility also to ensure adequate wage floors through adequate minimum wages, strengthening frameworks for collective bargaining. This has been agreed at international level with the ILO concept of a living wage and the tripartite agreement that minimum wages should advance towards living wages. The last point that I would like to mention for now is that there are also some inclusive alternatives to EWAs, many of which are actually driven by workers and workers' organizations. We see trade unions running hardship funds, cooperatives, credit unions. We have really good examples, for example, in India with the Self-Employed Women's Association actually running their own bank, providing financial solutions to workers who are in need of advances and credit. And so we should also look at alternatives beyond just EWAs to fill a gap in a way that can actually protect workers' dignity and without profiting from their vulnerability.
Thank you. Thanks a lot for that, Evelyn. And I appreciate you reminding us that EWA is from a labor perspective beyond the wage payment per se, but on relates to broader issues of workers' financial stability and financial resilience. So it needs to be connected to broader ILO agendas as well. And I think this is a point we also insist in our report. I would like to move now to Agustina. Also, Agustina, I think for employers, it's in a way not very different. I think it's also bigger than wage advance in itself. I know there are challenges. It's relevant for challenges typically faced by employers, but I think there are also important issues of digital integration, of payroll digitization, of business formalization, of access by SMEs. Can you also tell us a little bit more how employers perceive services such as EWA and the issue of wages advances in general?
Thank you, Andre, Valerie, Craig, and the whole ILO team for inviting us. I see a lot of unfamiliar faces in the chat joining online. So for those who are not aware of us, we represent the views of 50 million companies in more than 140 countries, both in developed and developing nations, not just representing the voice of business of multinationals, but also micro, small, medium enterprises, which, as you know, Andre and team, makes up the majority of our economies. And our members are nationally recognized employee organizations. So we represent the voice of business at the ILO. We are the secretary of the employers group, who are also active at the UN and G20. I'm joined here also by my colleague Natalia, who's listening online, who's supporting me at this event. Please don't hesitate to let us know if you have any questions on our positioning on this topic. I'm also take the opportunity to thank the employers participating in this event. Licia did a really great job from Apindo last week. And of course, we have Nadia here from Concamin, so it's a whole team effort. Before answering your question, Andre, I'd like to pitch the ILO report, which obviously you and the team made on earned wage access, a global study on benefits and risks that was, I believe, launched in April this year. For those who are not aware of, if there's any misunderstandings or different understandings of what EWA is, I suggest for you to read this report, because for me, it's like EWA 101, because it basically summarizes all the risks or perceived risks and challenges, and also the benefits of using EWA. And I thank also ACTEMP, who participated and helped with the report, and of course IOE members who participate in the global survey. So to answer your question, Andre, employers are generally positive about EWA, okay? This is not a new concept. It's just more and more things are going through digital transformation. It feels a little bit like when insurance schemes are first introduced, or private employment services when they first rolled out the first time some decades ago. There's always resistance from all quarters the first time, but once the users understand the benefits and how to benefit from them, it's easier to digest and implement. It's not that employers are hesitant to use EWA due to lack of regulatory clarity, and I echo what Carlos was saying. We are not asking for more rigid regulations. We just need policies to be clear, consistent, and predictable. We need clarity on how the workers can access the wages. How do we report on the taxation? That's important. Cost transparency. We want to know what the costs are for both the worker or the employer, depending on the different business models in each country. Obviously, each country have different business models. You have the cost per transaction, you have the subscription fees, right? So, and you have a hybrid of both. So we really need clarity on the cost transparency. And most important for us, and you've heard that from our members, it's to do with payroll and HR issues, which are sensitive and confidential information. So data security is key. So we need guidance on how to, as you mentioned, Andre, system integration, who to ask when technical issues arise. We want to avoid grievances and a reputation risk. You've heard that from us before, and that's also highlighted in your report from your survey. We need an investment in training. I cannot emphasize enough the importance of digital and financial literacy. This is so important. Who's liable if there's a misuse of data or breach? But if done correctly, it can increase productivity. We see the added value of it. It can help with employee retention. It can incentivize formality for those. It can help workers. From our side, it can help companies to have more efficient payroll systems. And of course, that helps companies to embrace digitalization and promotes financial inclusion. It also helps MSMEs to move away from cash. And there's that traceability aspect when it comes to compliance with tax and social security. I echo what your boss was saying, Andre, Craig. It has to be a win-win for all. So that's linked to what Carlos was saying in building trust. You really need to build trust in the system, but that means we need to have a better understanding of its added value. And we need to deal with the perceptions with regard to the EWA, negative or positive, and increased understanding of it. So events like this are so important. You mentioned formalization, Andre. We did have that ILC resolution, and Evelyn and I were in charge of supporting our groups for the ILC resolution on innovative approaches to informality. It does talk about consulting both workers and employers, which can enable new digital technologies to provide as an effective tool to transition to formality. So as you know, 6 out of 10 workers are working in the informal sector. I heard someone mention about predatory practices. So there are rogue players out there that are in the informal sector that are having this predatory practices, which we do not support because that does not give an equal playing field for our informal employers that are actually playing by the rules. So I stop here, Andre. Happy to talk about social dialogue later on. But from our perspective, again, we see this as a positive development and we should encourage more of it. We shouldn't stigmatize or demonize it, EWA, because it can benefit and all the constituents, the workers and also the employers, if done well. Thank you.
Thank you, Christina. And on that note, I will get back to Evelyn. Evelyn, I think you were both dealing with benefits and potential risks of EWA. It potentially can have benefits. I think we all acknowledge, but also many risks for workers and employers. Both you and Agustina were also very specific about the potential risks. How do you see the labor and financial regulations evolving, Evelyn, on that specific area? Nadia was mentioning a whole body of regulation that already exists, but I don't know if from your perspective it is enough, and if not, what should we really be aiming at in terms of regulating worker-centered financial services like EWA?
Sure. Well, first of all, I think that we need to look at both the labor side of a sphere as well as, regulation and policies in relation to financial services, and the two must be looked at together. We need to make sure that there are sufficient safeguards in place in relation to these services, and there are a number of clear principles that regulation should rely on. But first and foremost, as I hinted at earlier, EWAs cannot replace the obligation for adequate wage frameworks at the national level. That includes minimum wages, whether they are statutory and or negotiated through collective agreement. But in terms of financial service regulation, it's very important to have transparency. Workers must know the real costs of any service, including interest rates, fees. There shouldn't be any hidden fees or costs. There needs to be genuine consent as well. So workers should have the right to opt in freely with the full knowledge of the conditions, and also the real possibility to opt out or to change providers. You also need to have mechanisms in place to resolve disputes through credible and accessible mechanisms. Data protection is very important. The data gathered through EWAs should not be used to actually penalize workers, either through algorithmic exclusion or surveillance. Very strong protections and oversights are essential in terms of how data is managed, as well as how data might be monetized. There should be frameworks in place also to address debt traps, looking at safeguards like amount and frequency limits. I think Nadia mentioned amount limits earlier. Cooling off periods can also be helpful. Affordability checks can also be helpful to prevent dependency. We need to also look at coherence with labor standards, and Nadia also mentioned already Convention 95 on wage protection, which affirms that wages should be paid directly to workers who must freely dispose of their income. Convention 117 on social policy also calls for measures to protect wage earners for abuse. At the heart of all of this, there's something a bit more fundamental as well, not necessarily in relation to financial service per se, but in relation to the respect of trade union rights, because what we are seeing also is freedom of association, collective bargaining under increasing pressure globally. And without these rights, how can workers negotiate for decent wages, benefits, working conditions in the first place? Just to end on this, I think we need to avoid making temporary fixes for more permanent solutions. EWA might be able to help ease today's struggles, but the real solution, once again, is ensuring that workers can earn enough to live with dignity tomorrow. Thanks.
Thank you, Evelyn, for that. I will get back to Agustina also with a similar question on how do you see the regulation evolving. Evelyn mentioned, for instance, free association and collective bargaining in her answer. It would be great if you could also comment a little bit on the role of social dialogue and how you see that shaping a service like EWA.
Thank you very much, Andre. So the beauty of the ILO is its tripartite structure, right? You have the workers, the government, and employers all there. It's one of the most, I would say, unique, specialized UN agency within the UN family. However, there's a misunderstanding among policymakers, some policymakers, on what does social dialogue means. It's not the same as multi-stakeholder engagement, right? So the social partners are there at the table with the government, co-creating, and I'm going to use the word of Felicia, I see her online from last week, co-designing policies together, right? So it's the social partners are the real actors in the economy and has very important contributions to make on various labor social issues. Employer organizations are closest to the companies, and of course, the trade unions are closest to the workers, right? So wages is central to labor relations. So EWA needs, when it works in practice, can build certainty, acceptance, and shared responsibility. So social dialogue can balance this enabling environment for innovation and also take into account the workers' concerns. You have different sets of social dialogue, right? You have the enterprise level and you also have the national level. And of course, you have the sectoral level too. At the enterprise level, social dialogue can really help buy in and increase the strong understanding. Practical issues like payroll integration, data use, what are the options for complaint mechanisms that can really help social dialogue through social dialogue at the enterprise level. At the national level, this is where we can co-design the policies together with governments. So it's not just an announcement on a new bill in the newspaper where some of our members have told us they were not engaged at the national level when it comes to designing a new legislation or a new labor reform bill, right? Especially for those countries that have not ratified Convention 144, which is making sure there are tripartite consultations at the national level. So these are the common, I would say, grievances that we hear from our members. So we should not underestimate the value of social dialogue at the enterprise level and also the national level, because it can really promote the added value of EWA. And just to add another point, Andre, which I think it's a very common thing, and it's a very unpopular opinion, I have to say, so have an open mind with what I have to say. A lot of the government ministries, they work in silos. The Minister of Finance works in a silo, the Ministry of Labor works in another silo, and of course you have the central bank, which is independent, whereas the Ministry of Finance deals with policies. It's not that they're territorial in their mandates, it's just they don't talk to one another. So there's no co-convener. Sometimes you need the Prime Minister's office to step in and pull everybody together and say, okay, what do we do about this? But the problem with that is always to do with security or something high priority at the state level, right? It's not EWA or any other topic. So our role here is to promote the added value of EWA. And we welcome events like this because it can promote that kind of conversations on the importance of that. And just to encourage the ministries to talk to one another and to coordinate one another. And of course, we would love to have an invitation. I'm sure Evelyn would agree with me, the social partners to be invited at the table, because we have really strong contributions that could help build a solid policy framework when it comes to managing EWA.
Thank you so much, Agustina. I think that we don't have time for Q&A. We have a few questions. We are going to share them with the panelists and get it back in writing to those that have asked. I will just move to the final question, and this is also your concluding remarks. Please, let's try to make it as short as possible, maximum 1 minute. 1.5 at most. And I'll start with Juan Carlos, and taking from the point that Agustina just made on getting everyone on the table and working together, financial and labor regulators. More specifically, you have in your report proposed an ecosystems approach to regulatory arrangements. Would you consider the ministries of labor part of this ecosystem, and how do you think they can collaborate further with financial regulators?
Thanks, and I've enjoyed this conversation very much, and the points that all have made, I think it makes total sense. And on precisely the point that Tina mentioned is very much resonates with our ecosystem approach. We talk about the responsible digital credit ecosystem. This means that the different actors that have a role to play need to very much work together collaboratively, exchange information, create formal and informal forum for working together to address the risks in digital credit, and in all of these types of products that are appearing and emerging. And it's not only like a word of mouth or just something that doesn't have force or is just a statement. No, it's an active engagement between financial authorities and other actors such as the labor regulators, so that they can really talk about what the risks are, what the experiences are, what the solutions can be. And also in our ecosystem approach, we encourage that other actors are also involved. This means industry associations, consumer organizations, even research associations, other government authorities that are relevant, data protection authorities, competition authorities, general consumer protection authorities. We cannot work in silos. It's impossible because the market, the system is evolving in a much more rapid way than before. So a single actor cannot address solutions or policy actions independently and individually. This needs to be an ecosystem collaborative approach that puts customers at the center.
Thank you so much. And Nadia, almost the same question, but from a labor perspective, those are two very difficult topics: finance, financial regulation, and labor law. They are very tricky. It's hard to find people who are knowledgeable of both. How do you see central banks, ministries of finance, financial regulator authorities collaborating more with labor ministries?
Well, we have good examples here in Mexico. 2 years ago, there was a bill that was being discussed at the Congress regarding automatic payroll withholdings or deductions under the concept of personal loans or personal credits that financial institutions were promoting. And actually, most of the political parties disapprove it, and the former president said that he will exercise his veto power in order to cancel the bill. So I think that at the government level, all the important stakeholders are working together. And the reason of that veto was precisely wage protection. I think the Ministry of Labor and central banks can work together, as my colleagues already mentioned, in financial and digital education, fraud prevention, training to workers on the importance of savings. I think that will be very, very helpful. And as regards to policy design, I think we should move forward on EWA. I think we can find the way to make this work under the current framework, although it will be an aggressive approach.
Thank you so much. I will go now to Carlos. And Carlos, you are CEO and founder of a fintech. I think in a way, the regulation is meant to facilitate the work that you do. And as a fintech founder, I imagine you are more knowledgeable and comfortable with the financial topics. But as you see, labor is also all over the discussion. How do you see the need for fintechs to get closer and more knowledgeable and more aware of the issues in the world of labor.
Thank you for the invitation to be here with all of you. I think fintechs need to develop what I call the labor literacy. Like it's like financial literacy, but there's labor literacy here. But this is interesting because fintechs need to understand different employment structures, irregular schedules of the workers, seasonal work, the fact that some of the workers have 30-40% monthly fluctuations in income, and that means that it generates this different financial needs for different workers. So every fintech needs to have that framework when they're thinking about EWA and trying to understand like how to better position themselves to serve that worker. I believe that also, right, it's important to shift from thinking about financial inclusion. The way we see is that we look at every worker and we say, every Latino immigrant needs to be empowered. And to be truly empowered, we need to understand their, the 360 degrees, their financial situation. What are their family obligations? What's their work situation? What's their career trajectory in the country? And I think that's where we can really impact, the worker's life. So I agree. I think we all need to, as a fintech, we need to understand labor literacy. So thank you,
Carlos. And I hope we have supported you so far, and we have an ongoing invitation for fintechs who want to get to know more about labor in the years to come. Agustina, also your final remarks on this topic. How do you think employers organizations can help foster collaboration between ministries of labor and finance? How do you think they can help everyone get around the same table?
Thanks, Andre. So basically, they're the voice of business, right, at the national level. So feel free to reach out to them. Consultation is so important. When it comes to EWA, I think simplification is better. Then you have, it's easier for the workers to understand the fees and the conditions. Same with the employers, what the expectations, making sure that they're, in line with national laws and policies. So I think when you look at and this enabling environment for business to grow, we need to look at the sustainability micro, small, medium enterprises. So in terms of the policies, I think simplification is better, but social dialogue is something that I think is really, really key when it comes to promoting a concept which I would say has not enough understanding from different constituents. Thanks.
Thank you. And Evelyn, I think for you, final question, also concluding remarks. How do you see workers' organization contributing to bridge this gap between financial and labor regulators?
Just as Agustina says, social dialogue. No, workers really need to be involved in decisions that directly concern them. And that goes beyond just labor policies, but also the broader policies and regulations of the financial sector when it concerns the bodies that are dispersing their pay and benefits. So yes, workers need to have a seat at the table also in those broader discussions. I also really want to echo what Agustina said around the importance of strong policy coordination, the need to have a clear understanding of how EWA services intersect with labor policies. There is a need for cooperation between financial authorities and labor authorities, cooperation between consumer protection and labor protection. We need to break down the silos, as other people have said. We should also look at how to improve labor laws more broadly to provide for faster, more direct access of workers to their wages, such as allowing them to be paid perhaps on a more frequent basis, or requiring employers to provide no-fee advances to salaries upon request. That provision exists in a number of countries already, as highlighted in your report, and that can actually reduce the role for private sector providers to come in and fill such a gap, often in times, with additional fees, if the labor laws are developed in a way that is more inclusive and responsive to the needs of workers. So I think I'll stop there. Thanks.
Thank you so much, Evelyn. Valérie, I think the lesson and the homework for us is social dialogue, social dialogue, social dialogue. Would you tell us what are the main takeaways from your side?
Yeah, thank you very much. And thank you very much to all our great speakers today. It was a very interesting conversation that also follows the conversation we had last week with another set of great speakers. I think when it comes to this service, EWA service, I think I really picked what Evelyn said on the need to come back to the root causes, actually, of the emergence of this service, and looking at the issues of living wages and minimum wages, etc., and also keeping in mind that in all countries there are frameworks that are in place to secure adequate wages. So I think it's important to always keep that in mind for us to move forward. And maybe the whole issue of frequency of wage payment is also something we need to probably explore more. When I think we recognize also that earned wage access services provides opportunities for improving the financial health of workers. I think there is no doubt about that. However, there are challenges for the providers, for the enterprises, for the workers also, and there are challenges at the level of the regulations. What I heard during these conversations is that yes, financial regulations or regulations around EWA services, which shall be at the intersection between labor and financial regulations, are important. However, there is a need for having an environment that allow for innovations in the financial sector to enable providers also to offer suitable solutions that can help really the vulnerable workers, while at the same time protecting the wages and protecting the workers. Another point at regulatory level, I think you all agree that it's important that regulations are clear, are consistent, and again, guarantee the protection of the workers. I heard also a lot about trusting the system, so I think that's also what regulations or the regulatory frameworks should put into place. There was also a lot of discussion around the need for breaking silos, the need for bridging actually the different actors, the need for stakeholder dialogues around the topic, the need for social dialogue again around this topic. So we take that as a takeaway for the future. There was also, of course, the importance of putting the workers at the center of this discussion and making sure they have the necessary digital and financial literacy so that they can also benefit fully from the services. So from our side, our homework now is to put that into action. And I want to say that this is just the beginning. We would want to continue the conversations. We are in touch with a number of fintech providers or EWA providers actually with which we engage. So we will continue this conversation with them and with the objective of contributing to improving the practices actually at global level. So thank you very much for following this webinar. Thank you very much all our speakers today, and we'll be in touch again soon. André, back to you.
Thank you all very much. Thank you for all of those that have joined us today, and for the panelists, of course. This ends our webinar series, and we hope to see you in our next event. Thank you all very much.
Thank you.
Thank you. Bye-bye.
Bye-bye.
Thank you.
Bye.